Hello, I'm James Daly, CEO and co-founder of BaaSFlow. We bring banking infrastructure to the cloud. We have an API-driven, scalable, cloud-native core banking and loan management platform that we think will knock your socks off. Our goal is to make your customers happier, to generate more revenue for you. We're going to do it in a way that is highly customizable and giving you complete control over things like loan parameterization and the customer experience. So we know that you want a modern banking core system so that you can offer your customers or your members at credit unions the kinds of power and flexibility in the products that will keep you competitive with the world's largest banks or fintechs in a rapidly changing market. Last year, our system went live in production with a global Fortune 500 fintech. And as part of that, we lowered the API callback rate from 3% to under 1%. This speed, this performance improvement, translated into an improved take rate of over 14%. That satisfied more customers, on a volume of over 500,000 loans per day. So that satisfied more customers and generated more revenues. We migrated them from a legacy core system, actually a couple of them, to our core system, which is based on an open source project I started 20 years ago, which is now Apache Fineract, in which we maintain and evolve, and we're the key contributors to that. So imagine meeting the needs of your customers with an app that I'm about to show you, the kind of app that I'm about to show you, that generates the kind of feature or product, just as an example here. So this is an API-driven app sitting on top of a sandbox on our European customer banks. And it's a small business banking company, bank in Europe. And so what we've done here is we've created a kind of instant buy now, pay later concept where you're going through and you have a cash flow issue perhaps. And so you take a look at, let's say, I would like to finance this transaction here. This was an invoice that was paid, let's say. And I want to turn that previously paid transaction, that invoice, I want to convert that to a loan. So then this hits the back-end system with, here are the terms or the interest rates that can be offered based on the risk scoring that you've done. It gives you the terms that you want to accept. You accept those terms. And by offering this kind of product, you can build loyalty with your customers and prevent them from going to a competitor, prevent them from using some other service. It generates a book of loan for you. It generates a loyal customer experience. So now let's see where that ended up. So that should have created another transaction somewhere here. Yep, there it is. So it's backed out that 8,500, and it's created a new loan. So there's the new loan. It's just created now. And we can take a look at the payment schedule here. So this is the payment schedule, and we'll pay back, make a payment just for this example. So now I'd like to show you our back-end system. Right. With the back-end system, we offer an enormous amount of flexibility. And I can't show you much of everything today. So I'm going to just go through the simple process of creating a new loan account, or creating a new loan product, rather. So we'll go through and we'll give this a name. Product 7. P7. We could attribute this to a particular fund. Let's say you received money from the EPA grant program for clean lending. We could have a start date here that just began a little while ago. We'll go on to next. We'll choose the currency. This is a multi-currency system. We'll need to choose a principal default amount. Let's say that it's $5,000. We'll have a number of payments. Let's say it's for 12 payments of the nominal interest rate of 7%. And we'll have a repayment every month. We'll then go through, there's a number of other options here which we don't have time to get into. We'll go through and have an allocation repayment strategy of principal, interest, penalties, fees. There's down payments enabled, those kinds of things. We'll just go quickly through and choose a delinquency bucket, which is how the portfolio at risk calculations can be used. Also notifications to customers that they're in a certain late status. We'll go through a couple of other default things here. We can add a charge fee for opening this account. We won't go through the accounting complexity today, but here we have everything that we've configured very rapidly, and we're ready to submit. So this is now a new product on your platform. Now I'd like to go through and just show you one of the existing loans that's already been provided. Let's go find that loan that we just issued to ABC Innovate. So ABC Innovate has a loan here. Hopefully I will be able to find it. And, oh, live demos. And now I can't find it. I'm sure it is here. Is this ABC Innovations? Yes, it is. Well, we're going to go with, we'll just show you this one here. Oh, there it is. Yeah, that's the one. Huh. I already made a payment on it, so I was looking at the wrong amount. So the original amount was $8,400. The repayment schedule is here. The balance of the loan has gone down to $7,200, which is why I couldn't find it in my scan. The transactions are here. You can see those repayments has hit. And you know, it's not delinquent in any way. Oh, come visit us, and we're highly scalable and flexible. See you in the